This business about Goldbach levels.
In this video, I'm going to teach you how ICT's OTE optimal trade entry model is actually based off of Goldbach. Furthermore, I'm going to show you how his standard deviation projections, which he uses to take profit, are also very simple Goldbach concepts. Now, I know a lot of people think I cherry pick examples. So what I'm going to do is I have an old trade that I took, and I have multiple videos of the trade, including the profit. And I'll show you how I planned out the trade first, and then I will show you the chart to show you and prove to you that the OTE entry is simply a Goldbach algorithm that us in the Goldbach community are very much aware of. Once you start understanding the underlying framework behind Michael's strategies are based off of Goldbach, then trading becomes very, very, very easy. Now, before I start, I just want to do a quick public service announcement. So my last post on YouTube, I described this advanced model where I use the new day opening gap to create a dynamic Goldbach dealing range, and I was able to predict CPI price action. So the video I took halfway through that day, and this is the final price action of the week. So you'll see that the way I configured my dynamic Goldbach fib, I had the new day opening gap for the DXY and the 4 hour aligned with the fair value gap GB level, Goldbach partition. Once this was aligned, look at how the levels matched up perfectly. The low of the day was the bottom of the extension, and the high of the day was the top of the LV. Have a look at that video if you've not seen it. I've broken it down in the 1 hour time frame also, so you'll be able to see all the PDA arrays and how everything was put together. Again, there are over 100 videos on my channel providing ample evidence that Hoppy's Goldbach levels and algorithms dictate price action. So use that evidence and then make whichever conclusion you see reasonable to make, including whether you think Michael's strategies, including Enigma, are based off of Goldbach. And he said he would never teach you Enigma, but Hoppy and I teach you Goldbach every single day, be it on the YouTube channel or on Hoppy's private Discord group. Now, I think there's less than 15 seats left on his Discord until the price will increase, because it's getting difficult to manage. So if you would like to join Hoppy's group, then there's a link to his book in the description below. Now, first, providing evidence that the price action I'm going to show you today to explain OTE entries isn't hindsight analysis. Instead, I took the exact trade, and that trade is from the 18th. Well, it's way before that. It was in early May. It was on the 4 hour time frame, so I did hold this trade a while. So these are the videos that I kept. So this was my analysis first. Okay. So at this point in time, this was a screenshot that I had taken, predicting what the price would do. Okay. It would retrace to the 4 hour fair value gap, and then it would retrace lower. And then this is me marking up the trade I took. Okay, note the Goldbach levels that I have. Now this was back in May when I didn't have a YouTube channel. So this is on my Instagram. I don't really accept people on my Instagram group, so don't spam me on my Instagram, please. If you want to find me, you can find me on my official Twitter, or if you would like to speak with me, then you can find me on Hoppy's official Goldbach Discord. So, tapped into the trade here. There you go. This on P&L, which will be running. This is on MT5. Okay, entries, stop losses, take profits. Okay, that's video 1 showing the analysis plus halfway through the trade. Let's have a look. What else do we have? Video 2. Some more charts. The trade is running. I think I might have taken some partials off. Oh, I was just having a look at PMI, how PMI would react with the Goldbach levels. So still running profit. And then the third video, I must have pyramided back in on some kind of retracement. It was a while ago, it was back in May.
There's nothing like this. And when you get involved in it, you're either going to fall in love with it and fall head over heels over it. Even if you're not profitable yet, you're still going to love it. If you feel that way, I'm going to tell you something. You are destined to do well in this. You have the very thing that's needed. That means the passion and the endearment for this industry. Because if you're a casual, just let me just dabble and see what happens. If I make money, great. If I don't, fuck this shit, I'm out of here. If you lose money and you feel like this is it, this is the worst thing that could ever happen, this decision you made was the worst thing you could have ever done for yourself, the trading is not for you. Because losing on trades or losing an account for a real trader, that doesn't mean shit. That's just a speed bump.
Okay, so I didn't actually hold this trade all the way down to the logical conclusion of the algorithm because I didn't need that much profit. It was just to pass a funded challenge back in the day. Now, unfortunately, my Forex funds no longer exists. So that was amusing, but it is what it is. This is why I don't trade prop anymore. I don't want another situation like this. Now, looking at the charts, this was a 4-hour fair value gap, and I was tapped into the trade around the 16th of May 2023. So let me break down this analysis and prove to you that the OTE is nothing more than a Goldbach concept. Now here's the chart. This is Euro USD. I've run time back to the 12th of May on the 4-hour time frame. So let me first break everything down to first principles. This is the piece of price action. The whole purpose of the OTE entry is, as long as price is aligned with your daily bias, you can wait for a retracement to an OTE level, take your trade to align yourself with order flow again. Okay, so let me exemplify this for you. Now, I don't use OTs anymore, but I did load it up. So the concept is, if this is the high and this is the low, you would expect a retracement to around the 618 or the 786, with the sweet spot being the 705, and then you can take your trade here and go further down. Okay, because ICT says that this is your dealing range and you are looking for an OTE retracement into the dealing range. Okay, so why don't I mark out the sweet spot first? This is ICT sweet spot. Right, this is the OTE. A second concept ICT has is, once you are tapped into a trade, you can take profit at standard deviations of this price leg or of this dealing range. So if I then produce another fib, and this time, okay, measured move, reverse it. Hopefully you can see it. This is the second standard deviation of this price leg. So you would expect to take profit here according to ICT's teachings. Okay, so this would be your trade. So let's say you go short here. If you know that this is the bottom of ICT's dealing range, right? This is the huge problem with ICT's teaching is he gives you the teaching, but he doesn't actually define what the dealing range is, what the fair value gap is, what the order block is. That's what's ambiguous. And this is why Goldbach is powerful, because within Goldbach, you know what the dealing range is and you know where the correct premium discount arrays are. So if you were to take an OTE entry here and you magically knew but price would retrace from here, you would take your short here. Maybe you would have your stop here. Okay, and you would TP here. This is your trade. Now let me show you how things work according to Goldbach. So I'm just going to hide this because we know what these levels are according to ICT. This is how I took the trade. Load up the indicator, DMN's ICT AMD Goldbach. We don't need AMD boxes. We don't need GB time. We were running on the 243. Let's have our labels in white. And let's have our stats box. Okay, so what do we have here? For my old school followers, and for those on Hoppy's group and who have the book, what is algorithm 2? Algorithm 2 is, we start at the rejection block, we fall to the breaker, we retrace to the fair value gap, and then we TP at the opposing order block. Okay, so as per my video, I was marking out the algorithm 2 path. Rejection block, down to the breaker. I predicted a retrace to the fair value gap, and my TP was the opposite order block. This is algorithm 2. So, first point is, the OTE, if you understand that this is ICT's dealing range, then you can anticipate an entry here, right? But as Goldbach traders, we understand that the dealing range is actually from the high to the low, which is here, and algorithm 2 will make its way, create the breaker, retrace to the fair value gap, GB level, and then terminate at the opposite order block. So when ICT says he's creating a language which allows you to trade, he is giving you a general, simple, vague pattern. Goldbach gives you the precise levels. So we understand that the algorithm will make this path, and as Goldbach traders, we understand that in order to get an OTE entry, we ideally need a retracement from the breaker block level, right? This is the power of Goldbach, because we know algorithm 1 is rejection block, breaker block, fair value gap. So we are only really taking trades if we get our retracement from the textbook fair value gap level, which is predicted by Goldbach right here. Now, where does ICT want you to TP? 2 standard deviations, or 1 standard deviation of the extension of the breaker block. We are a lot more accurate in that we know, in fact, we can get a little bit more out of this trade. At the very least, we expect the bullish order block to form here, and this is where we exit our trade. This is how I was able to get such a great return. So let's play out price and see how it performed. Now let's just modify this a little bit. So I'm removing ICT's general way to trade, okay? And I'm going to show you how we trade in the Goldbach world and how I took the trade. How did I know this was algorithm 2? Because according to Goldbach, we expect a order block to form in this order block GB level. There is your order block. Okay? Let me remove the OTE now. Furthermore, we expect a fair value gap to form in the fair value gap GB level. Here is the fair value gap. Now, from memory, I remember that this was very precise. So I remember that the consequent encroachment of the fair value gap produced by the candles was very close to the consequent encroachment of the fair value gap GB level. So let me turn that on for you now. So the green line, there you go. My memory's not that bad. Here is the fair value gap, consequent encroachment, the green line of the candle fair value gap. The yellow line is the consequent encroachment of the fair value gap GB level. My trade, which I took, was something like this. Okay, here are my entries. Okay, so here are my levels for the trade I actually took on the day. And let's put them in. So my first entry, my best entry was at 912. Okay, there's my trade. Let's take off the consequent encroachment lines to clear up the price. action for you guys. And let's play it out. Tapped in. So your OTE entry, according to ICT teaching, would have been here. See how it aligns with rejection block, breaker block, fair value gap. That's how he gets this OTE number, but I'm a lot more precise. And then his standard deviation projections. So he normally says you can take it off as a 2 swing, and I've seen teachings where he says take it off as a 2.5. This is why the 2.5 comes about, because it aligns with the order block level, which is the termination of algorithm 2. So just showing this trade play out. See the reaction here at the top of the LV of his 1 to 2. This is exactly the bottom of the breaker level, the opposite breaker, or the top of the LV. But I held a trade because I knew that we were supposed to TP here. Bang, we are done. Muddy price action after that. Right. So do you see how Michael's OTE model is actually based off of Hoppy's algorithm 2 for Goldbach? The difference is, as ICT traders, you have no idea that this will retrace to the OTE. As Goldbach traders, let's get the GB level up here again, the range. We know that if we are reversing from the breaker and there's a fair value gap in the right place, this could be an algorithm 2. That's how we get in. But we also know where to TP, the opposite order block. Could have been a 12-hour trade. I took it off earlier because I didn't need that much to pass that particular challenge. If you would like to learn more about Goldbach, then there's a link to the book below. If you would like me to make more videos explaining how ICT concepts are actually watered down, poor man's versions of Goldbach, let me know below. I will show you the trade again that I took so that there is no doubt that I traded this about 9 months ago, way before my YouTube channel was out. For those of you who are on my private trading Instagram, you better find this trade. I would have posted it around the 25th of May. Go find it for guys who are on my Instagram. If you're not on my Instagram, please don't send me a request. They're kind of hard to manage. I hope you enjoyed this advanced Goldbach teaching, and I hope it brings you one step closer to understanding that all of ICT concepts are watered down versions of Goldbach.
There's nothing like this. And when you get involved in it, you're either going to fall in love with it and fall head over heels over it. Even if you're not profitable yet, you're still going to love it. If you feel that way, I'm going to tell you something. You are destined to do well in this. You have the very thing that's needed. That means the passion and the endearment for this industry. Because if you're a casual, just let me just dabble and see what happens. If I make money, great. If I don't, fuck this shit, I'm out of here. If you lose money and you feel like this is it, this is the worst thing that could ever happen, this decision you made was the worst thing you could have ever done for yourself, the trading is not for you. Because losing on trades or losing an account for a real trader, that doesn't mean shit. That's just a speed bump.